Ameritrade Network contributor Jenny Horn to the show. I want to keep things moving, keep on our earnings trend here. Let's talk some Fubotv, Jenny. This is a name that's almost come full circle at this point from where it was. Huge rally into the end of the year. Huge move lower, huge rally again, and now we're kind of back to where we were. So this is, volatility in a nutshell when you look at this name.
Absolutely. And just to paint a picture of the move that it's seen, this was, of course, a beneficiary of sort of the pandemic over the course of 2021, but now it sits up about 70% below their highs of about $62 a share, which they hit at the end of 2020. So a pretty significant slide there, but this is still sort of a baby company, at least I consider it, that, I think that this growth story is expected to, take some tumbles as we sort of work our way, into being a more established company. They have earnings today post-market, and analysts are not expecting them to, of course, generate a profit yet. They're expecting about a loss of 44 cents a share for their earnings on sales of nearly $103 million. And they've missed pretty significantly in the last 2 quarters on their EPS estimates. But what I think is so interesting about sort of their slide they've been in since the beginning of this year is there's not really any material changes to the story in Fubo. In fact, I actually see some sort of, tailwinds going forward that makes it, I think, at least see healthy growth in the long term. They plan to launch a free-to-play wagering app in the 3rd quarter and a sports book in the 4th quarter. Now, we all talked to Penn National yesterday ahead of following their report, and I discussed how only about 10% of their gaming revenue is derived from their sports book, and 90% of their revenue is still derived from traditional slot machines. So for that reason, I don't see the sports book making a huge splash for Fubotv's stock. But what I do really like is this free-to-play model, because this, I think, could add some exposure and maybe add subscriber growth in areas they haven't really tapped into before. As we know from Epic Games Fortnite, when they were first introduced, this free-to-play gaming model is one that is highly liked among gamers. So I think that could be a potential catalyst for growth for Fubo. Another thing is this stock, despite its slide, has very strong analyst rating. About 6 analysts that covered this name give it a buy rating, and only 1 has a hold. And the average price target currently among analysts sits at about $45 a share, which implies a near 180% upside to its 12-month price. So I would say that is a good sign. And some of this optimism was reflected on social media this morning. So that brings me to our first tweet, which is definitely the more positive of the two, which says, "With how Roku reacted off of its earnings, I am very optimistic for Fubo earnings Tuesday." So I liked this because I often think, we compare Fubo to, say, a Netflix, a behemoth that maybe I don't necessarily see it trading as closely to, versus Roku, I think, is much more in this space. Of course, Roku is much, much larger, but Roku had, as far as I'm concerned, an A-plus report card on their earnings. They beat on earnings, they beat on sales, they issued higher than expected sales guidance. So if any of that sentiment is reflective of Fubo, they will have a strong report potentially. But our next tweet sort of questions, some of Fubo's promises they've made and some of their guidance they've given going forward, which says, Fubo's CEO just stated 43% of cable customers are likely to move to virtual multi-channel video programming distributing in 2021. We love cord cutting, but that decline rate is absolutely laughable and factually incorrect based on 1st quarter 2021 reporting. So this virtual omnichannel video programming distributing is, first of all, a mouthful, but it is basically just that you operate online, but you still serve live TV. So exactly kind of actually what the TD Ameritrade network is. And I think this is interesting. Now, 43% turnover from cable to basically an OTC network to me seems very high. And the timetable of by the end of 2021, I think seems unlikely. However, I do remember a day when we all used landlines, when cell phones were obsolete. And now that story has sort of flipped. Now, you'd be hard pressed to find someone that calls using their landline or what we call their home phone, because cell phones have sort of taken over that space. So potentially these streamers are doing just that. I'm just not sure that that rate of adoption will happen by the end of 2021, because that will be a very, very quick turnover, Kevin.
Jenny, when this adoption does happen, these stocks won't be where they are now. So you've got to be a little bit of a visionary when you look at these names. And one thing that Fubo, everything you read about Fubo is growth. They are growing in terms of viewers, in terms of subscriptions, and the numbers are big. Now, normal for a growth company like this is for their earnings per share to be not attractive, right? They don't make money yet, but they are growing and they are extremely positive about their growth expectations for the future. So this is a name that has a crazy chart pattern, as you can see. But if you are a fan of this name, if you believe that this name is growing and getting more popular, this stock, frankly, is at a pretty substantial discount, Jen.
Hey, Kev, one thing's for sure. This name has had an incredible move over the last year or so, and arguably maybe some of it was tied to other factors. But at these levels, maybe some of this more fundamental reasonings for investing and trading names comes back into the picture as well. And so I think it becomes more interesting when it comes to more realistic trading levels, as opposed to going, 5, 6, 7x in a matter of weeks, like it did at a couple of times throughout 2020 and the early 2021. But Jenny, always a great conversation, great setup as always as well. Jenny Horn, TD Ameritrade Network contributor, we appreciate you joining us this morning. Look forward to talking to you again soon. So we say goodbye to Jenny. I want to welcome in the co-founder of LikeFolio.com, Landon Swan. And Landon, with these prices in Fubo becoming a little bit more compressed, it makes your data arguably more and more interesting and important as we look at the kind of future of this company and what the prospects look like. Is the story that social media paints for Fubo a positive one?
Yeah, I would say that the story is pretty positive. I mean, we've got a lot of increase in mentions. The purchase intent is, through the roof effectively. Very, very strong numbers out of Fubo. And the stock has been on a wild ride. I mean, you could say it's basically flat over the last 6 months, and that would be accurate, but it's also gone up 3x and then back down to where it is. So it's not for the faint of heart as far as investing goes. Really wild ride. But when you look at, people talking about signing up for it, it is doing extremely well. You can see a huge downturn around COVID times when there were really no sports on TV. This is what they do. This is their primary thing, is sports. But now it's hitting all-time highs as the stock is falling off. Now, I will say that there is a lot of churn. Cancellation rates are very high. They do offer a 7-day trial, so that does sort of artificially inflate purchase intent. People will often sign up for 1 week because some sporting event that's only carried on Fubo is on. They'll watch it and then they'll cancel. But that is an opportunity for the company to show them what they can do in that week and get them to stay. But we have seen a pretty high churn rate. Now, we got mentions at purchase intents about 73% up year over year, which is about what their subscriptions are up year over year. Last quarter, they talked about how they expect subscriptions to actually decline in the middle of this year. So that would be in the reporting that's coming up right now. So I think there's a little bit of expectation for a decrease. So I think expectations are lower. That's reflected in the stock price. It's been cut in a third effectively. And but what I can say is I really like the strategy of this company. They bought Victory, which is a fantastic name. They've got the VIG priced in there. That's a really cool name for a sports betting company. And they're going to integrate that. So you're going to be able to watch a game and bet on it at the same time in the same platform, which has never been done before. And I can tell you, me and my buddies, we're sports gamblers, and I can go back 15 or 20 years and we would be watching TV and we would talk about, man, I wish they'd have the lines right next to the game on the screen and somehow we could bet on it. And finally, it's starting to happen. I mean, all the big players like ESPN, NBC, they would not touch sports betting. I mean, announcers were shunned from even talking about what the line was. And Fubo's going the opposite direction. They're going all in, saying this is huge for sports. And I completely agree. And the profitability is really, really big. If you think about right now, their average revenue per customer is just over $60 per year, and that's a very simple model. That's sort of a Netflix model, but they're adding a whole new element where people are going to be able to bet on these games. And generally speaking, when you bet on a game, about 10% stays with the house. That's the VIG. That's why they bought out Victory. So that's going to increase the the dollars per customer on a yearly basis tremendously. And I think it's a huge advantage for this company. I love the vision, and I love them at the price that they're at right now, off about 60-70% from their all-time highs.
Yeah, Landon, what you mentioned about 10, 15 years ago, sitting in front of a TV, to have that product available there, that was taboo. You couldn't do that. That would be socially unacceptable. Now, advanced 10, 15 years later, it's now completely embraced and actually invited and looked for. And what's brought that on is probably pro football and fantasy sports and things like that. It's become much more popular and mainstream. And so their evolution into that is really interesting. But when I look at your data on this name, the first thing that jumps out at me is divergence. You've got divergence in your consumer purchase intent. You've got divergence in the mentions count as it pertains to the stock price. Now, we always can get in that conversation about valuations and growth companies and things like that. However, the number one thing you look for is growth in a growth company, and you're clearly getting that here, and you may be getting this stock at a discount because of. My question to you is, why are they looking at numbers being down for this quarter? Is there a seasonal component to some of these numbers that should be discounted when you look at them?
I'm not positive about that. I don't think that's the case. I think this is just a case of an extremely volatile name, very high beta, and it maybe got a little bit of ahead of itself. I think it got up to 48 or 50, something like that. And the stock has, been extremely wild. The markets are, they're tough right now. I mean, they're up and down big numbers every day. But I got to tell you, you point out that divergence. That is one thing at LikeFolio that we always look for. If the stock is moving in one direction and the purchase intent and the mentions and the happiness, it's all moving in the other direction. And that's the case right now. I mean, the happiness, we haven't even talked about that. Dish's happiness is about 62%, Fubo's 69%. So they're doing better there. And I think when they do launch this sportsbook app and have it right on the TV and integrate everything fully, I think they're targeting Q3, maybe Q4 of this year. I think happiness is going to go up because I can tell you, this is anecdotal, this is not data, but I've got a lot of friends that bet on sports, a lot of degenerate friends. We love it. It's fun. It's an entertainment expense. And it would just be a game changer to be able to see lines, especially if they had live lines during the game, and be able to bet on them during timeouts or whatever. I mean, the sky's the limit for revenue when it comes to that, because you're going to get people very, very, very engaged into that product. And I just don't see them canceling. And all of a sudden, that $60 a year for subscriptions is going to be meaningless. They may, this is forward looking, but as a strategic move, they may say, you know what, we'll give away subscriptions to the sports as long as you bet at least X amount per year, and they're going to make more money on that. You get people in the door on these sports betting engines, and it's just going to be really transformative, I think, for this company. And, I liked it in the 20s and 30s, maybe even the 40s. I think that was getting a little ahead of itself, but I really like it here at 1650. It's a longer term play. It's a growth play. So there's a lot of risk they've got to execute. But just the fact that they're buying out Victory and they're integrating that tells me they've got the vision and they see a way to compete with the ESPNs, the Hulu TVs, the YouTube TV, all that. And I think that they can, if they execute it, they could really be a big winner in this space.
Landon, I just want to kind of sum things up, because I think you guys covered a ton here, and I think a lot of important information, particularly kind of the general kind of spirit of the age is this time of disruption. Technology is really being integrated places. We talked about Barstool yesterday and the acquisition Penn National made that really kind of brought them back into the game when it comes to where things are going within gambling. You look at the streaming space and how it's disrupted legacy cable companies, names like Netflix, names like Roku. You go down the list, Sling TV. What's to stop? My building provides AT&T Uverse, for example, Landon, and it's a streaming version of basically legacy cable. What's to stop these legacy companies from coming in and just providing this service, cutting their prices? And it's a name you already know. Is it going to be this user experience stuff that you're describing, the lines on the games, a niche within this the sporting realm that's going to set Fubo apart?
I think so. I think the traditional, the big companies are still pretty afraid of sports betting. And, they're still stuck in that age where it was taboo, where announcers couldn't even talk about the line. And just because of streaming, we've got a lot of innovators that are able to come in and shake things up and do things that the way they think they should be done, as opposed to the way that the institutions think the rules should be adhered to. So I don't see a company like AT&T making that kind of shift. So really, it just comes down to which sports that Fubo is able to display, which games. They've got to get good games that people want to watch, and they've got to compete with the ESPNs of the world and all the different variants of ESPN. So as long as they're able to get good games, then I think that just by way of what their decision making is, and saying we're going to offer this opportunity for people to bet on the games, as long as they have good games, I think that they're going to do really well. I don't see anyone coming in and replicating that, not from a big company. Now, there may be another smaller player that tries to do something like that, and I think that's the biggest threat to a company like Fubo. But right now, with the vision that they have, I love it at this price, and I think the key is they've got to get good games that people watch. So far, they're kind of doing okay at that. But once they get those people coming on and betting, especially in-game betting, live betting, timeouts, all that, I really think that dollar per user number is going to skyrocket, and it could take investors by surprise. So at this price, I think it's a bargain over the next year or two.
Love these kind of overlooked names and love these conversations. Landon Swan, it's always a pleasure. And thanks for taking the time this morning to join us. Fubotv, the co-founder of LikeFolio.com, Landon Swan. Thank you as always, Kev. Let's talk some